Hello and welcome back. I want to make a quick video about market timing and why I said this before, but I really do believe it. It's better to be time in the market than timing the market. You cannot predict this shit. I actually sold it at Airbnb a bit ago. I thought it was a little overvalued and I got extremely lucky. I sold off, I believe, on the 15th and it's down 20% since then. Obviously, I also held on to a lot of things that are down a lot since then as well, but I could have been very wrong. But the point is, I said I was posting some videos saying I'm a little scared that there might be a pullback. I had no idea why. I thought it was going to be interest rates. I thought it was going to be this. Obviously, it was there was a new COVID variant, and that's scaring people away from travel stocks. It's scaring people away from tech, which actually that's a weird one. To me, if there's a lockdown, don't you think that would help companies like Netflix and Facebook? But it doesn't seem to be. So I think there's just general market fear. But this is why I believe you always have to be invested. I hear people say, "Oh, shouldn't we go all in cash?" No, I'm never a believer in all cash or all equities. I think you want to be well diversified, and that's really what I'm trying to do. I'm really trying to still have tech companies because I am a big believer that in 10, 20 years, these companies are still going to be way bigger than they are today. Um, these tech companies. And I'm a huge believer in innovation and growth. However, I also think you could see some major weakness from some of these companies. Just look at ARK. ARK Invest has been clobbered in the last month. It's down 25%. It's a big drop. Now, do I still think in the long term that the companies that ARK invests in are going to do better? Yeah. But if you're fully invested, you can't take advantage when a company dips that you think is undervalued. So that's why I really want to stress you should be well diversified. Big believer in the barbell strategy. Go invest in the Teslas and the Palantirs of the world, these high growth, high upside companies, but also have some safe stocks. I'm not the biggest Apple fan. I don't believe the company is like super innovative, but they definitely are a super strong company. You look in the last month, they're up 6%. They pay a small dividend, but they're one of the rock steady companies, what they call a safe haven asset. Like this stock is not going to drop 50%. The company's just too strong. It's too well diversified. They have AirPods, they services, they got everything. So Apple is and I think I made another video. You can check the other video here, but companies that are not diversified or too conglomerates that have too many different divisions and how they don't work together. Again, Apple's the other company maybe that's done this super well, that they have lots of different business lines, but they all work together, part of the Apple ecosystem. When you buy an iPhone, it's not just about the iPhone. Yes, they also have AirPods, but it's the fact that the AirPods work seamlessly with the iPhone. It's the fact that if you have an iPhone, you can easily use they sell you cloud storage and try and make it easy. They're trying to build this ecosystem where everything works so well together. Right? The App Store vets the apps so that you can easily use them on your iPhone. There's this whole ecosystem. So again, they all work together. Could you spin the App Store out as its own company? Probably not in my mind. I think it's too interconnected. So I think Apple's done this really well. But back to the actual topic at hand, I think you want to be well diversified. So make sure you're not just invested in high growth stocks, not because those won't do well, but you get the best returns when you see these massive dips. If you look here, if you invested here, you made 59%, but if you invested after the dip, you did 114%, almost twice as good, twice as much. So, I always try to have some less volatile stocks at hand. So for me, that's been financials. So those are banks and insurance companies which pay a solid dividend. The dividend will help me kind of pay some cash just to hold it. But typically, they're also not going to drop as much. But you have to do your own research and look into what makes sense for you. But I'm a big believer in holding some more stable, solid companies so that if you do need some cash, you can either, if you have cash on hand, great. But if you don't, maybe you can sell something that's up a bit today, or even maybe it's only down 1%, but you say, hey, if I sell something that's down 1% of the week and I can buy, Netflix, which is down 12, because I think Netflix is going to be better in the long term, then that's really how I do it. So I really try to stay well diversified. So hopefully this was helpful. Let me know what's your biggest holding. I'm still much too heavy in Tesla, but I am slowly starting to diversify and try and get that below 40% of my holdings. But still, it's done too well for me, unfortunately. So yeah, talk to you next time.